Welcome to Lunch Money. I'm your host, Nikema Boulware, Business Development Executive here at Guardian Credit Union, and we are so very excited that you decided to join us for lunch today. Now, if you're tuning back in, thank you so much for joining us again, but if today is your very first time joining an episode of Lunch Money, you are definitely in for a treat here today. Now, let me tell you a little bit about Lunch Money. Our purpose for Lunch Money is to truly connect your personal financial goals with realistic advice and relevant resources to help you kickstart your financial journey. Now, we all know that financial success is completely different for everyone, so we give you bite-sized information to really kickstart that journey for you. I'm excited because we have some wonderful guests today, some that you've seen before if you joined us for our first episode, because this is part 2 of our 2-part series on home loans. And I'm going to go ahead and allow my guests to introduce themselves.
Hey guys, I'm Jenny, and I've been with Guardian for 6 years now. My favorite part about being in the mortgage department is helping people reach their long-term goals, whether it be buying a house now or getting prepared to buy one in the future.
And I'm Gavin Caldwell again. I've been with Guardian Credit Union since 2013, and one of the biggest things I love to do is just help people come up with a plan, whether that's refinancing or purchasing that dream home. Just sit down and put a plan together.
Oh, yeah, I think we got some good things that we're going to talk through today. Well, listen, go ahead and grab that worksheet that's going to help us, help you continue through this conversation with us during the episode. And don't you dare worry, because if you forgot to print it, we're going to go ahead and add that in the chat for you, okay? Another housekeeping thing I want you to think about is when we're going through the episode, any questions that you have, anything that's relevant to what we're discussing now or that we've discussed in the past, go ahead and submit those in the chat so that when we get to the Q&A, we can go ahead and get those answered for you. All right, I think we're all set and ready to go. Let's check out what's on the menu today.
Absolutely. Thank you so much, Nikema. The first thing we want to do is just kind of go back over purchase. I know we talked about that on week 1 and kind of broke that down, but just kind of touch on what Guardian offers, the types of loans that we offer, and in-house, whether we keep the loan or whether we sell it, but kind of what that looks like, just as a high-level view.
We're also going to talk about refinancing of a mortgage. People have been really calling in or putting in applications because it's such a hot topic right now.
Yeah, and then finally, we're going to kind of finish up with the construction loans and land-only loans, kind of what those look like. Does it make sense to build? Does it make sense to buy land? And just kind of go through that process real quick as well.
Well, it looks like we have some really great things that we're going to talk through today, and I'm excited to go ahead and jump into that. But before we do, kind of share with me, why is it so important to understand the differences with each types of purchases or loans that you'll do to get into your dream home?
I believe the expectations of each type of loan is very important. If you're looking to build a home or buy land and build a home, there are a lot of different processes that you need to be prepared for. As far as, the purchasing or the refinancing. Refinancing, of course, is a lot easier, but you do have other avenues to make that refinance work better for you.
Yeah, absolutely. So it looks like we have some really wonderful things that we're going to talk through today. So we want to jump in and get started with that traditional purchase, a purchase of a home. Let's talk about that, Gavin.
Absolutely. I know on our first mortgage lunch money, we talked about getting ready for the purchase.
Absolutely.
So like I said, after we get ready, at Guardian, we try to tailor the product or the solution for each individual buyer. So we've got a lot of different loan products we can look at. That could mean traditional or conventional, so to speak. That could mean FHA, which is a federal home loan bank loan. That could be a veterans loan. That could be a USDA loan, which is kind of U.S. Department of Agriculture, so kind of out in the county. Just kind of depending on what your situation looks like, we can do a lot of different loans to try to fit you in what is best for you. We like to say there's not a loan we can't look at, whether that's a traditional home, whether that's a mobile home with land, whether that's a lower priced home, even $15,000, $20,000, $30,000 or up to $1 million. We like to look at any of it.
So it looks like when we're talking about a purchase, there are so many different options that are available for you, but just having that conversation with us, talking to someone, and really understanding what your short-term and long-term goal is for home ownership is going to be the most important when picking out the solution that's going to be best. So one of the things that we want to talk about, Jenny, you mentioned in when we're saying what's on the menu was refinance and how it's such a hot topic right now. Walk us through why refinancing is such a hot topic, how it works, and who should be thinking about refinancing.
Okay, well, one of the biggest things that we found is people want lower rates. Either lower rates, cash out for maybe consolidating debt or making renovations to their home. Also, adjusting terms. Some people are in a 30-year fix, they want the lower rate and to maybe cut it down to a 15-year fixed.
Yeah.
That's right. And a lot of other things that we're seeing now, especially during the pandemic, maybe they've got a little bit more credit card debt, or maybe they've got some other debt and they've got a lot of equity in their house. So they want to kind of roll all that together to maybe pay some of that debt off. We see a lot of that right now. Or do they want to do some work to their house? Do they want to redo a bathroom or redo a kitchen or add on to the house? We see a lot of that with refinances as well. But it kind of comes down to each situation, kind of like we said with the purchase. With some people, they just want to do a rate term refi, which means they don't need cash out. So we like to talk to them about, hey, how much money are we going to save? How much interest are we going to save? And then depending on your plan for the house, does it make sense to refinance now? How much money are you saving on a monthly basis to make up for, say, some of the closing costs?
Right, because I know a lot of people, it's like, you know what, oh my God, rates are so low, but it may not make sense for them. And I know when we've talked a little bit before about if I'm only saving $50 a month on my mortgage, does that really make sense for me?
That's right. And like we talked about earlier, we want to talk through that because it does all depend. If you're going to sell the home next year, well, then saving $50 may not make sense because of the closing costs that's incurred. Now, we can roll that closing cost into the loan where you're not paying that out of pocket, but it definitely wants to be a piece of the conversation, because if you're saving $50 but closing cost is $3,000, and it's going to take you 7-8 years to make up that difference, but you're going to sell the house in 2 years, well, maybe now is not the time.
Yeah, that makes perfect sense. I get what you're saying.
Or look at, it could lead to other conversations. Is there other things you want to pay off, like we were talking about earlier? But we definitely want to sit down and talk about it and go through it with them.
Yeah, refinancing definitely seems like something that's not as cut and dry as most people try to make it seem like. So if you have any questions, go ahead and throw those in the chat, because we want to make sure we get to those in the Q&A, because this refinance thing definitely sounds like we could have some interesting questions about that.
Yeah, it really gives us an opportunity to look at your entire debt. To see if there maybe is some room and equity in your home that you can maybe cover some of that. A lot of things happen in life, loss of job, especially due to the pandemic. You're looking at maybe lowering your overall bills and your cost, or, different life events can, warrant you to maybe look into a refinance to lower that payment.
That's some great information too. Thank you, Jenny. So when we're thinking about the next phase, the next type of loan that's available to us is that construction loan. And I know living in the South, I hear this all the time. I'm going to get me some land and I'm going to build me a house. So talk through construction loans and why we're different when it comes to construction loans.
Absolutely. The biggest thing is, I know we've said this a lot today, is kind of your personal situation, but what we see a lot with construction loans is people want to get out of the city a little bit. Mm-hmm. They want to, like you just said, find their land, build their dream home. So like I said, it can look a lot of different ways, but the biggest thing is you're going to find that land. You're going to find a builder that's going to build that dream home for you, and then we're kind of the third party trying to put it all together.
Okay.
Because what we're going to do, we're going to be with you from pre-approval to breaking ground on the foundation to final walkthrough on that final house down the road. So we're kind of with you the whole process. And I know depending on each situation is a little bit different, but construction loan is where you're going to build your dream house on your land. I do want to kind of talk about it a little bit, because some people think if they're building in a neighborhood,
right,
that may be a construction loan. That is generally a purchase as opposed to a construction loan. So I just want to highlight that real quick.
Yeah, so when you're thinking I'm going into this neighborhood and I'm picking out all of these different things that I get to put into the house, that's not really a construction loan. That is a purchase. You're purchasing from a builder and they have a set look that you can choose from, and you're just going in and doing the finishing touches on everything. So that's important to know as well. When we're talking about construction loans too, talk to me about you said that you're going to be with us from the beginning to the end. What's all involved in that process?
Well, during the construction loan phase, after you close, you're able to request draws. Those are typically cash going into your account so you can pay your builder.
Yeah, and then we're going in, we're doing inspections on the house, we're talking to you, we're getting pictures of the house. So it's a lot more. It's the most involved loan that we do. I'll say it that way.
So having that personal touch, making sure you're working with the right place is really important when you're thinking about a construction loan, because y'all are really going to be there and working together through the entire process of building that home.
That's right. And some of the construction loans that we've done, it's been a couple year process, and not that the construction loan is that long, but hey, can I get pre-approved? Well, now I want to go talk to an architect to draw up the plans for this house. Now I want to talk to the builder to see how much it's going to cost to build this dream home, and then getting it appraised, getting it pre-approved, and then, like I said, breaking ground and going through that whole process. Yeah, it's the most most personal loan that we do.
It's very exciting to get pictures throughout the build, and you can't help but get excited for them because this is their dream home, and it's a pleasure to be able to walk through them on that process.
Well, that's great. I'm really excited about that because that kind of segues into our last type of loan that we do, and it's a land loan. And I want to talk about why land loans are important and why we're so good at doing land loans.
Absolutely. We have a land loan product. It's for raw land. A lot of people want to either purchase land to maybe build on in the future or to set up a mobile home. I've had many members who just want to have land to hunt on.
And the good thing is with land, kind of going in, kind of piggybacking with the construction, the good thing is if you've got land and then you're looking to build, you have automatic equity going into that construction loan. So if your land is paid for, well, that's automatic equity going into that construction loan down the road. Or it's just a free asset, so to speak, sitting out there as well, depending on if it's paid off or not.
Well, one of the things I do want to mention, because you said the equity piece, I often have heard that your land value can change, depending on what you're doing. I purchased this land, 5 years ago in thinking that I'm going to build my house on it. And then I do build my home, and the value of that land that I started out with has now changed because that home is on it. So I think that's important to know as well.
Absolutely. And that goes into that appraised value. It can really help and kind of steer the down payment and things that you may need to put into that build. But absolutely, if you built out in Pike Road 40 years ago, land value is very different 40 years ago than it is right now.
For sure. For sure. Well, this gives us a great segue into talking a bit about buying versus building. I know it's a personal choice for you, but why is it important to understand what you're wanting to do?
Well, a lot of people have their ideas of what they want their home to be. Some people have been thinking about it for years and have already come to us maybe and have already got their plan, and they're getting, ramped up to build that home, or they've changed their mind and they just found a house they fell in love with equally and they just decided to buy instead. There are, more risk into a construction. Things can happen. And then having a house already built, it can have its advantages.
Okay.
And yeah, it kind of comes down to what we said. I know we've highlighted this several times, kind of each person's situation. But a lot of times what we see is the construction loan, that's not generally their first home. Mm-hmm. That's going to be maybe their second home or their third home, or, they bought a house, when they were young, or single or married, whatever that situation is. And it may have been a 2-bedroom, 1-bath, or 3-bedroom, 1-bath. And then they upgraded that home. And they said, nope, I'm ready to get away from all these people in this neighborhood.
Oh, yeah.
I'm trying to get away. So.
And I get what you're saying, because most often I remember growing up, I'm from a small town, and everybody that I knew that I grew up with, our families live in the same home that we were raised in. We came home, we're in that same home. But you just mentioned how this may be your lifestyle right now, and this is the first home I purchased, then it's a second or a third home. What is the stigma behind multiple purchases of homes?
Most of the time, people think it's just not possible, because, hey, I've got this mortgage now. I can't get another mortgage. But like I said, it really depends on the situation. Are you going to sell that home? Are you going to rent that home out? There's a lot of different options that we can look at and just kind of talk through it, depending on your situation, each personal situation, to try to tailor a product to fit it, whatever it is.
Oh, yeah, I'm so excited. Again, if you have any questions, go ahead and add those in the chat. We want to be able to get to those a little bit later on. Now, as we're wrapping up, y'all have definitely made it clear that we do things so different here at Guardian. Why don't you share and highlight some areas that we are able to help our members differently from other places?
Well, one of the first things I'd like to think about is our in-house product. It's definitely different than what you might see out there. You can see the loan from your app or your online banking. It's serviced by in-house, which means us. If you have any issues, you can contact us. One of the other things is the loan to value. We can go up to 90%, and that means no mortgage insurance. And when I say 90% loan to value, I mean what your house is worth versus what you owe. And as far as the mortgage insurance, that's going to be something you may not even be aware that you're paying on your escrow statement. It's an additional amount that's added to protect your loan with the investor.
And just to kind of piggyback off Jenny said, the biggest thing with that no PMI and that 90%, I'll just give kind of a pretty simple example. Say your home's worth $200,000. 90% of that's going to be $180,000. You owe $150,000, but there's maybe $25,000, $30,000 in debt that you want to roll in. I know when we were talking about refinances, well, we can go up to that $180,000 without mortgage insurance, so you don't have the added cost. Most lenders are going to be capped at 80%, which would be $160,000, whereas we can go up to 90%, which would be $180,000 to potentially pay more bills. And then another big thing that we like to do is just flexibility in the underwriting. We like to say, and I've said it before, there's not a loan we can't look at. Kind of like with the underwriting piece, say you're self-employed. Say you show a lot of cash flow, but maybe you don't show as much on the tax returns because of whatever that looks like. I know we grew up in Alex City.
Absolutely.
So I grew up in kind of the trucking business, so to speak, or the logging business. So it was showing a lot of cash flow, but then there was also, you didn't show as much on your taxes. So we can go through bank statements, look at your actual deposits, and go off deposits as income as opposed to your tax returns. So we've got looking at a loan right now for a builder, kind of the exact same situation. We can kind of be flexible with that underwriting to make the loan work.
Absolutely. And I know one of the other things that you talked about was in these processes, your availability. I think it's so important to highlight how available you are to walk our members through the process with any type of solution that they decide for themselves.
And another thing that sets us off from other lenders is it's not just about your score. Just like with the consumer lending, where you go into Guardian and get an auto loan or a personal loan, we look at the whole picture. We look at your situation. So if you're out there and you feel like you're not worthy of a mortgage, or you're nowhere close, but you're renting and you've been renting maybe for 10 years. I've had a lot of members like that they just, were fed up and they wanted to get a plan together. Please give us a call or contact us, because we can definitely start working you toward meeting your life goals.
Now, it looks like we're able to help people, whether it's your short-term or long-term goals when you're talking about home loans.